good to see you again. And a very, very warm greeting to you all for joining us for this conversation. One of my favorite insights, which I get from you regularly, is given that you travel extensively, you meet so many different, interesting personalities. Over the last couple of months, what standout personalities have you encountered?
Good morning, Bronwyn. Good morning, ladies and gentlemen, and thank you very much for coming, being part of this event, and engaging us and supporting us. So I can tell you a few stories about, my kids are still laughing about famous rock stars I bumped into in airport lounges, not recognizing, and then chatting to them about the football game on the TV, and then absolutely embarrassing the family. There was this one guy you might know if you follow UK sort of music of a few years ago, Will I Am. Okay. And I was at the dinner sitting in the SA Embassy, Desmond Tutu on my left, it's a long time, this is not now. And this guy called William next to me, dressed like the Matrix, looking really weird. And I thought I wanted to make him comfortable. And I sort of started talking to him about South Africa and William this and William that. And eventually I took a selfie and I told my kids I had this cool guy, William, next to me. And my son, who was a teenager, just embarrassed. He said, Dad, you just embarrassed her. So I didn't do anything like that the last 6 months, but I did have it's about 18 months ago, just before Trump. When did Trump get in?
You're not supposed to ask me the
But about
questions.
2 years ago. Anyway, I did meet President Biden, and the guy next to him was very good at whispering in his ear what he had to say. It was almost like a guy next to doing all this. But this year, I was very fortunate to meet Mark Carney at an informal session in just before he went into the Canadian election, so a bit more than 6 months ago. And the one thing I saw, and a lesson for me, is you must listen, not talk. So I know the Prime Minister of Canada quite well from the time he was our regulator in the UK, and we worked together on environmental and sustainability issues for a number of years under his chairmanship. And so we were chatting, and the one difference I saw was the steel and the line he was going to throw to be Prime Minister of Canada. So the speech he made, the groundbreaking speech he made in Davos, was entirely predictable, and one should have anticipated that and shouldn't have been surprised. And to me, the lesson is when you meet interesting people, don't try and tell them what you think about their football team. It's actually listen and watch their eyes. And it was very clear that Canada was going to lead the middle powers if I play back that. And so message to me is, you got two big ears, listen. Keep your mouth closed and you'll know what the world's doing.
And as Siobhan highlighted earlier, Mark Carney saying that the old order is not coming back, which really brings us to the change that we are navigating at the moment. An appropriate place to start is to look at 91 as an active manager, an EM-focused manager, and how you are navigating this changed landscape.
I think the key thing about navigating change, and if those of you who, like me, I'm increasingly a YouTube fan. I know how valuable that business is because you can watch what you want when you want. You don't have to kind of wait till 6 o'clock to watch something on TV or fight with your kids over the video or, recording, and then they always wipe it out and put rubbish on the TV when you want to watch. All the good rugby games I want to watch always wiped out because my wife recorded some series, never-ending series, which then eats up all the capacity at home. So anyway, you were
Coming back to that emerging
coming
market
back
position.
to change. I want you to watch RJ Bonga's interview with Francine Lacroix from Bloomberg. She's the other interviewer in the world who's half as good as Bronwyn. But he was talking about change and how he drove change in the MasterCard business, which he built up from when he took over. It was 20 billion market cap. When he left, it's 360. I think it's today well over $500 billion. But a lot of his plans, and the key point was, don't say you're only in this business. Be open to change, and particularly technological change, and then adapt your product to that. And I think we have to do that as investors as well, because we can very easily, particularly by professional buyers like many of you in the room, we get boxed into a very tight process. And you say, but you must do exactly what I told you, do what's on the tin. But actually, as a firm, as a group of thinking individuals, we have to evolve. And for us, and then you have to know when to be stubborn. So we were extremely stubborn 3, 4, 5 years ago. In fact, exactly 4 years ago when the world changed, when interest rates went up in the US from 0.25 to 5.25, US sucked in all the money. The Mag 7 started to dominate completely, and actually all the cash flew into US bonds, but not making money for people, but they were just buying it. And emerging markets and the rest of the world was starved of capital. What did we say as a firm? We said, well, actually, it's all good and it's fine. We are going to sit this out. We're going to do what we do well. We launched a strategy called Focus to Grow. We focused on our skills, our differentiators, and where we thought we had an edge. And the world has come back to us in a big way last year, and we're ready to compete, and we haven't been diverted by getting involved in buying businesses to chase growth at the end of a growth cycle. So I think that the trick about change is, where are your principles? And you should have very few principles. People who have too many principles can never live by them. But those principles you have and those key strategic imperatives you have, you stick to, you live and die by them, and then you are open to reassess them or open to change when opportunity comes. And I think the change we're seeing now is that the world is splitting very much, regionalizing. The multipolar world is here. Tech stacks are differing between East and West. Opportunity sets are different. And I think, look at the story of today. Sorry, I want to end with this one. Capitec. Michiel Leroux explained to me at a restaurant, I can remember the restaurant's name, near Paul, what he was going to do to banking. When he was a frustrated executive running a mid-sized bank, a Boerland bank, with an owner who wanted too much earnings too quickly, and he couldn't invest in tech. He said, I can do something where I serve the poor, where I build a technology platform that's totally competitive. And today, a share, if you own our funds, you will have quite a lot of Capitec in them. Today passed first rand, or this week, as the largest market cap bank, because he saw the change and then stuck to the change.
Talking about size, does it matter when it comes to asset management? Look at the Schroders deal. How is that impacting you? I see out of the top 500, you're sitting at 91 at 146 from an asset management perspective.
Size in most things does count. Okay. I was thinking about rugby. I was quite good at turnovers until under 16, and they told me I'm not big enough. I've got to go play in the back line. But Jean-Pierre Rives was much shorter, and he was a legendary French player. And Kwagga Smith is shorter, and a bit of weight training. I could have probably done turnovers, but the big players matter. Weight matters, and I think in all industries. But those scale benefits often only go to the market leader in a market, and there can only be one or two market leaders. All the other players should not be chasing size, because they won't win if they compete on size, because the big guy is already there or too big. So take in the global asset management industry, BlackRock built and Vanguard built behemoths, and Fidelity built a very different kind of behemoth. Abby Johnson built a fantastic business, totally different from either BlackRock or Vanguard, but worth more than those two organizations. But we can't compete. But do you have to be large enough to compete is the question. And what does it take to be large enough? Now, 91 had a higher operating margin than Schroders before it got taken out. We have exactly the same financial metrics. In fact, if you look at everything over time, and we're very similar businesses, we've matched them wherever we wanted to match. So why do we have to be, and they're 5 times bigger than us, so why do we have to be 5 times bigger and therefore 5 times more complicated, with 5 times more problems, with 5 times more risk, instead of being a neat, tidy, business that knows exactly what it does. What we did, though, we anticipated the fact that there are benefits to market leadership. And in South Africa, our home market, we really went for it, which explains the rationale behind the Sanlam transaction. What Siobhan didn't say, she talked about Sanlam having a share, but we acquired approximately 400 billion rand of assets, but that wasn't the real thing. It's fixed income on top of ours, so it doesn't really affect most of the equities that you do. There's some equity business, but it gives us distribution to a market we don't normally serve. So the insurance market is a very different market, very different kind of savings that profile, very different way they save. But it brings us very sticky money for the long run to build a market leader and give us the size and scale to, for example, go into areas like rebuilding of South African infrastructure. It's a great opportunity for us to go into a different asset class, build absolutely at scale, lead it, work with the big banks, etc., which we couldn't do if we had to go around with a collection board to all of you and say, give us a little bit of your
I
extra.
want to talk more about the South Africa opportunity in a moment, but
Sorry, let me just say one thing. So scale in home market matters for us to lead. In the rest of the world, we want to be specialist in surgeons, being best in class, and you have to be top 5 in your category and be known for it and be a firm people want to deal without being the domestic name. That's why our strategy is very clear, and we don't need to go and double our size and just add quadruple our complexity.
the geopolitical environment we have to touch on.
Well,
And there's fragmentation, as you've already alluded to. How does that change the opportunity set, and how should you look at risk a decade from here?
so we actually thought about that. And for us being a part of a BRICS country, we're supposed to be non-aligned, but sometimes our government doesn't quite get that bit clear. But being part of this world that is not American or Chinese or European is giving us a particular opportunity because we are neutral, and hopefully we'll get our foreign policy vis-a-vis the US right, but we are neutral in many markets, and we now have an opportunity to compete against US players on equal terms because they have lost their advantage because people aren't necessarily copying them, aren't necessarily wanting to support them. Because what happened in the old days, particularly Asian countries, gave lots of business to US service providers in order to sell them goods. Now Donald Trump has said, don't want a goods deficit with you. I want to trade, have balanced trade, which is actually makes no sense, no economic sense. And I'm going to tariff you. So suddenly there's no incentive to supply, to give the US services revenues on the current account, and therefore the political imperative has changed from a world that was biased in favor of the hegemon, companies from the hegemon, to a world that is a bit more open. And we at 91 think, and that's why we opened offices in the Middle East in the last year. That's why we've announced a very important partnership with around our Chinese investment with a Singapore-based firm, because we see a big opportunity in this world for the neutral players. And I just hope politically we can have the flag that is actually intelligently neutral.
We shared a stage about 2 years ago, and we did have Larry Fink beamed in from the US. In terms of that discussion, where you were very enthusiastic about the South African opportunity. In fact, I think we had a little bit of tension on the stage there. I was less enthusiastic around the South African opportunity. But of course, I should have taken heed of that, and I should have gone boots and all into the South African equity space. How are you feeling right now?
We were very positive because of the rate of change that we saw. From the disaster depth of despair of the Zuma era to a less dysfunctional GNU, okay? And the rate and the impact of that on financial assets, plus the South African financial assets were extremely cheap. And very importantly, the man who should be in this room, we should be celebrating this year, the governor of the Reserve Bank, Lesetja Kganyago, held the line, and everyone said, cut rates, cut rates. He squeezed inflation down. He forced the Treasury to agree with him reluctantly to go for a 3% target. And suddenly, South Africa in the international capital market context re-rated as a stable, sensible, well-run macro or macro or on a macro basis well-run, and that attracted capital, and that capital has driven asset prices up very significant. And we had a commodity boom, which I didn't anticipate, but I was bullish. Now it's much harder because we've had a big uplift, and you can see in the results of the retailers, the economy is still tight, but structurally there are good things happen. I don't know whether you saw the data from SARS this morning that, our middle class in this country is now decidedly black. The percentage of black or non-white payers of the upper end income bracket is now majority. So we've shaken off the divisions. We're busy shaking off the divisions of apartheid. We're all united that we need water, decent governance, and we need to drive the criminals out. And actually, that is an amazingly good position. The execution is going to be hard. So I'm at Bronwyn. I was at probably 8 out of 10 when you argued with me. I'm probably 6.5 because the work is harder to do, but we have reached a far better position than what we think we have. We shouldn't be confused. And this morning when I was in the hotel and I followed Banyana Lesufi's advice, I showered in the hotel and there was water. So, it actually, we are seeing direction. The Sona speech was pretty okay. The test is 2026, 2027. How are we going to execute? I have my doubts in certain areas, but I'm also quite bullish that South Africans are starting to unite around this and are forcing it. People are striking today out here in West Dean and places like that. They riot.
Water shortages.
Yes, they're pushing. They're not just accepting.
And then, of course, the other thing is where we go from here in terms of galvanizing South Africa's real progress. You say that this is going to be a pivotal year, 2026, for South Africa. I dipped into that conversation that you had with Jordan Hill-Lewis, the mayor of Cape Town, with regards to South Africa standing for something. And it was so clearly put in that discussion. You both concurred that it should be for growth and job creation. Anything that enhances growth and job creation, agree to do. Anything that doesn't, delay or put on the back burner.
That's why he runs a good city. I mean, I wish that guy would run a good company as well. Because you know what he does in Cape Town? He walks up the streets of Cape Town, the long streets up to the mountain. He does one a day if he has time. And then he sends his phone messages to the city people and say, why is it messy here? Why is this going on? And Cape Town has an unemployment rate of 18%, or Western Cape versus the rest of the country, which is far higher. So I think he's right. You cannot have too many priorities. And the priorities for this country is to give people work. And we're very fortunate. Now go back to RJ Banga's interview now as the president of the World Bank, not MasterCard chief executive, last week. He was making the point why he's bullish on emerging markets. And I was kind of worried that we at 91 were believing our own hype here and all that. Sometimes fund managers do that, you'll know. But actually what he said was there are a few sectors that is currently experiencing growth and will have more growth in emerging markets. Infrastructure, rebuild and invest because rates are quite low, they're financeable. Tourism, most employment intensive sector you can get. It's not big in the GDP, but it's very big in employment and keeping people off the streets and keeping people away from hunger. Agriculture, still fairly labor intensive, but lots of work for seasonal workers, etc. We should drive our agriculture far harder, far better, and support. And there should be far more government support, starting with better ports, but and security, etc. And then there's education, the rethink of education. If we can break the unions here and use technology to educate kids, I just want to share one story. We have a scholarship a program which we run at 91 called Change Blazers. Someone clever thought that name, Blazer, Change. But anyway, it's still Change. But we at all times have 91 smart kids in South African universities. That's our objective. The top kid in mechatronic engineering in UCT in his year this year is a kid from a squatter camp outside Cape Town. Why? Because he had bandwidth. He could access, and we give them a bit of bandwidth as well. He could access education in a home where he barely has a place to learn. And that tells me technology is going to change the developing world, and the provision of technology is a great new business that we should do. So there are lots of sectors and opportunities where the emerging markets can benefit irrespective of, call it threats, but also there are opportunities, but threats of AI. I think there are more opportunities for emerging markets and more threats in the white-collar dominated wealthy countries where people shuffling bits of paper, which now may not be needed.
I want to deep dive into AI. And a number of themes at the World Economic Forum this year delved into artificial intelligence, the impact on humanity. And listening to many of those top behavioral scientists put forward their thesis, you want to actually push Alt-Delete and wish it had never happened. I mean, but there's a lot of enthusiasm. We have to embrace it. It is part of the change. How are you feeling about integrating artificial intelligence into the asset management industry, how it changes research, data, distribution, and as Siobhan highlighted, how it changes client expectations, Hendrik?
I mean, I'm sort of half guilty to, or not guilty. You could either be a doomer or a boomer in AI, and there's actually a group, and they're different, and they all have their own agendas. But it is worrying that some of the founders of the AI movement, of the real developers of what is today known as artificial intelligence, like Jeffrey Hinton, the Brits tend to invent everything. He's a Brit as well, sitting in Canada, and it was Toronto University which really drove all of this. The Canadians forgot to capitalize on it, and the Americans took it and made a lot of money. But we should listen to the boomers. We should think about it. And actually, there's a great, if you talk about opportunities for your kids, there's a great, something akin to the sustainability movement, job opportunity for people who are going to be critically assessing how society should tame this horse. But unfortunately, the horse hasn't bolted. It's kind of out of the stable and running. And Donald Trump has just freed it up more by taking all controls away. So we are going to have to live with it. And I think the boosters have a strong argument as well. And I personally, if you look at my bets, I encourage my son, who is an engineer, to go into this. He's currently doing a second master's degree in this topic, and he keeps telling me this is frightening, and he keeps showing me what they do and all of that. And then the interface with neuroscience, and you would have noticed the Chinese have just approved their guys to do what Elon Musk is trying to do, is put things in chips in your head. So we are going to have a fundamentally different form of humanity, and we need to adapt. But let's not go there. There's many decades before we.
Let's go to the competitive. How you
the world.
keep the competitive advantage.
In our business, I wrote a note to our people in end of 2022. I visited OpenAI, which was probably the most chaotic company I ever visited at that stage. They were growing so much, but we wrote a note saying this is the Promethean moment. And there's a change. A lot of people say, is it really the boss writing a note from the desk there, type of thing. Actually, if you go back, the world has changed a lot. In 91, what we did, we just opened up experimentation. I said to people, do what you have to do, learn, improve your thing. This year is the year where we have to translate that into efficiencies. Those who fall behind, even in our firm, will fall behind. Those who embrace will be ahead and will win, because this is a big wave. And it's nothing to do, and Clyde will talk about the overvaluation of AI stocks. Internet stocks were also overvalued in 99. You remember that? Okay? They were overvalued. And then they became the Alphabets and the Googles of the world, and they, our world changed and we did things differently. That is about to happen. and is busy happening, and companies need to adapt. But I think it's a phenomenal opportunity, not only to drive productivity, to make your experience, client experience better. Think of all those money laundering things you have to do every year, all that nonsense you guys get subject to by us because the regulators force us. If we could make these processes simple, and we could give you a token with all your data, and you could just send us the token, and the token could be verified by an AI agent somewhere. You know what? We all have a much better experience.
Do you use AI?
I'm not a good enough user for the simple reason that I don't have enough desk time. So unless something is mobile, because I spend a lot of FaceTime with people, and then I still old fashioned. I like reading and I like thinking about things. But I have created a few agents, and now I've got two very smart young people who I've asked to come and create my agents. I'm not as developed as by the way, if you guys haven't paid your tax, you better go sort it out. SARS is not only run by an honest man, but they have been identified by Microsoft as one of the most sophisticated users of AI in the government sector outside the defense sector. Ed Kisvet has created a board of directors for him where he has agents, artificial ones, a negative one, a positive one, a difficult one, and then they're asking questions. So I have one that helps me write things and speeches where I
Does it speak to you?
no, I'm not one of those. And you and I are going to sit here in person, but if they want to replace us, they're probably going to have digital versions of Clyde and other people here later. Are we still flesh and blood types? But I am trying to say where. So one of the areas I think really good is your financial analysis of the company every month. You know, those small lines in the spreadsheet you don't want to read, where they're spending 100% more than they should spend. You can teach the agent to kind of highlight exceptions for you and then tell you what they think. So last thing, we've experimented. If you read our annual report, you're going to get a lot of that, which is the first draft, feed 5 in, feed the conditions in, and say, "Oh, what should I say to shareholders?" And actually, it's coming out quite okay. So we might not spend as much time writing those things anymore.
I'm not sure if there's something you should disclose in a forum like this, but anyway, I do want to talk about those. I mean, Siobhan spoke about signals and differentiating between signals and noise. You've gone through a number of cycles over the last 35 years, and as we close out, what should we look to for long-term trends, sustainable trends for the next 35? Lessons learned.
So I think just come back to this previous point very seriously. We have to ensure, and that's why we'll always be a human business. We have to ensure the quality of what we do is right. The thing doesn't write nonsense. It doesn't tell you the hallucinations that constantly happen needs to be checked, and therefore people need to understand the facts. You can't have people who are dumbed down. That's my worry about AI. People get dumbed down. They don't want to do the hard work. So you still have to think, what is your message to clients or shareholders or whatever? But some of the heavy lifting could easily be done, and data is not short, and you can look at data which is different from data in a book. These things can read photographs. These things can go and read aerial photographs, tell you how many ships in the ocean, etc., which you never will have the time from. So that's great. But coming back to the change in the industry, we were a cottage industry, our industry, 35 years ago. It was essentially an offshoot of the insurance industry. We started saying savings need dedicated attention. Savings need professionals, and also advice is important. Many of you represent that. Advice is important. I believe none of that has changed. But what has changed is where people invest. Markets have moved from public markets only to private markets have been included. So a significant, I always say now, as a active long only, predominantly long only manager, we are an alternative manager, because actually the biggest revenue pool of our industry is now in the private markets, private equity, private credit, real estate, real assets. And then passive has risen as a tool. ETFs, nothing different from mutual funds, but they're great exposure tools, because you don't have to wait 3 days to fill in a form. You just buy the thing on the exchange, you've got the exposure. So exposure management has improved. Costs have become an issue. Technology, and therefore intrusiveness of clients in terms of what you do. In the old days, My job was to take your money. When I ran the equity fund, I took the money. I didn't worry about the benchmark. I just gave you more money back. And if I gave you less money back, you fired me and you went to Alan Gray. That was what happened in the old days. Okay. Very simple. Actually, much better outcome, by the way, than all this measurement and metrics that we confuse ourselves with. But now clients are so intrusive. Our large institutional clients want to build into our systems from the back. We don't even send them reports. They just draw the data. And so data has become much more important. Data integrity, accuracy, and absolutely being absolutely transparent. So it's like those kitchens. In California, I saw the kitchens with a chef. You can see him cook. Now, that's not how kitchens were run 30, 40 years ago. People were at the back and they just threw in the pot what they wanted and then they dressed it up and took it over. So transparency is costly, but that means our industry is better. It's better scrutinized, slightly over-regulated. I think we're going to get regulation back, but well-regulated by and large. And an industry which has delivered for savers. Think if we were not here collectively, where the South African wealth pool would be. It would be in bankrupt golf estates. It would be in all sorts of other ventures, online gambling, crypto, expensive insurance, etc. We have collectively created, not only for South Africa, but across the world, a savings pool that is professionally managed of $150 trillion, which can finance the future and future businesses and future job opportunities. So I'm very proud about what our industry has done over the 35. It's become a hell of a lot harder. You've got to be a hell of a lot better, but that's the reality in all industries. Competition takes you up or takes you out. And that's exactly what's going to happen. And in 91, we look forward to and we're ready to compete for the future. And I hope we can do it for you in a way which benefits ultimately you and the end savers.
Hendrik du Toit, the founder and CEO, 91.